Good afternoon, Raghi Horner here, and this is an afternoon Forex update. We're taking a look at the Dow right now because this is the story, and the story being yesterday's convoluted Fed message and the way in which the market interpreted it. I'm not blaming the Fed. I'm certainly not blaming this childish market either. But what's happening is I believe that traders and the Fed are pretty much on the same page in regard to tapering, but what I think the market is missing out and what the Fed's doing pretty much the lousiest job possible communicating to the market is that if and when tapering begins, it's going to be a wait-and-see type approach where traders will take a look at what the Fed is going to actually present to the market by way of how much to taper that $85 billion. And then the Fed is going to take a wait-and-see approach to see how the market and the economy, not even the market primarily, but the economy, is dealing with this tapering. So as the Fed feels more and more comfortable, the tapering will not be some sort of series of pre-planned steps, but rather taper, observe type approach. And it seems that that is what the Fed has continued to push, this idea of monitoring the situation. Frankly, why would tapering be any different? I think as this little bit of perhaps common sense, I'm trying not to be too patronizing, but it seems that the market is really overreacting every chance it gets, as if any bull and every bull out there cannot wrap their heads around this idea that the market can correct without falling apart. So much pessimism comes into the market whenever there's a move lower that what is really just a correction begins to feel like there's a top in place and this is it, and the market's going to reverse. There's a long road to travel from an uptrend of this quality going into a downtrend. Consider this is an uptrend that is rooted in at least the last 4 months, 5 months, and this is almost the end of May, so let's call it it's a 2013 long uptrend. Is 1 or 2 days going to undo this? I don't think so. I don't see anything different coming from the Fed, and therefore, with the Dow being the basis of where I feel confident that there really isn't a message that has changed from the Fed nor the BOJ, I feel very confident in continuing to look, and this is the Japanese yen futures, the JPY contract coming up, which for those of you that are non-Forex traders is much like trading a yen US dollar versus a dollar yen. The downtrend here persists. Yes, we're seeing some yen strength here, no question about it, but is that going to translate into anything more than an opportunity for yen traders to sell the yen? Now when you transfer that to the dollar yen, it's an opportunity for traders to buy into the pullback on the dollar yen. Now, I want to mention this pullback on the dollar yen is a very interesting scenario because you have an incredible amount of dollar weakness. This is a very weak dollar. We have an enormous amount of negative sentiment and momentum coming into this dollar. So obviously when you take a look at the dollar yen, what you ultimately have is a weak dollar, strong yen push. But now we're starting to get a little bit more of yen strength. I wouldn't say the dollar is necessarily getting a reprieve yet, but as the Dow tries to pull itself up by the bootstraps out of what was a 125 point down move. I'm not saying we're out of the woods yet. In fact, we're still seeing a lot of weakness, but this is nowhere near the kind of weakness we saw before. So I don't believe there's any reason to panic in terms of what the Dow is going to do quite yet. I think it is finding selling support amidst this, let's try that again. I do think this Dow is finding buying support amidst this selling pressure today. Where this market's going to ultimately land, I don't know, but I do know that a 15.3 level has been fairly persistent resistance for the Dow. Am I still then a bull in terms of the dollar yen? Absolutely. I'm still very much a dollar yen bull. I'm still very much a euro yen bull. In fact, for the most part, with the exception being likely the pound and the Aussie right now. The pound I'll take a look at in just a moment. Take a look here at the dollar yen. The pullback we had there, we found support coming out of the 101 handle. Here's the euro yen, finding support coming out of, you can see here, the 20 period simple moving average, the 130 level, as well as the 34 EMA high. I don't like the Aussie yen because the Aussie story is so very weak, and you can see here we do not have an uptrend any longer on this Aussie, so this is not a pair that I will consider, even though I am overall a yen bear. The Kiwi yen is a little bit better, but still be very cautious if you wander into the Kiwi yen. The one plus is that the Kiwi yen has managed to rally back above that very long-term uptrend line that dates back to November of last year. The pound yen, as you can see here, while it was testing the validity of the wave, has maintained support, and this is another market that pulled back to the swing buy zone between the 20 DMA and the 34 EMA on the high and managed to find some support and is trying to rally up higher. Not my favorite. I really do prefer right now the dollar yen and the euro yen. Another pair to watch is the Kiwi yen, just in terms of all the relationships back to the yen. It's had a rough go, but in the ComDoll comparison, Aussie yen, Kiwi yen, Loonie yen, this is probably one of the better looking pairs. I would say focus your attention, if you're interested in ComDoll strength against the yen, focus on the Kiwi yen and the Loonie yen. The Loonie being a little bit more preferred to me than the Kiwi being more so than the Aussie. I do like the dollar and the euro yen right now. In fact, I do want to mention the euro yen is having a really good day, in part because we're getting the re-weakening of the yen as the Dow is regaining some of that lost ground. So the yen weakness is there. So we're seeing strength in the euro yen. But I want you all to remember that the euro is getting a boost on the US dollar weakness. So be cautious, because the euro yen, yes, it is firing on both cylinders, but a lot of the euro strength has to be credited back to the dollar weakness. So this is not just direct euro strength and yen weakness. This is dollar-driven euro strength and then the Dow recovery yen weakness. So thanks for joining me for this midday update. I'm Raghi Horner. See you in the next video.